welcome Sam Silverman.
Cool. As we're doing, good to meet you all. Good to see you all. I see a lot of familiar faces from Facebook, and so it's good to see people in person. So great to be here. Today we're talking about raising money, which for a lot of people right now is one of the biggest areas they're struggling with or working through, or the big bottleneck they have in their business. Right. So you're looking at buying deals. You have really three main pillars you work through. Right. One is can you find deals? Two is can you manage them effectively? So we kind of work through three things that really matter, right? You find deals, you manage them effectively, and the biggest thing is can you go raise the money to actually close those deals that you find? So today we're going to dive into that. Go to the next slide. So why should you care about what I'm saying and what about any kind of credibility here today? So my background, as Jenny's mentioned, I started in Zen. I had zero real estate experience at the time. And what I figured out was, can I go sell? Right? So in college, I had no critical skills, barely got through high school with a solid 2.1 GPA, and got into college out now. And went to marketing. That was the easiest major in business at the time. And when college was kind of coming to an end, I looked at getting an internship. I think I worked with paychecks for one day and got fired. And sort of applying to every job on the job board, and eventually got to go work for a super small tech startup. And that was a great place to go learn. But you work for a company, especially you have to get into a company that's either a product-led company by a product-led founder, or a sales-driven company by a sales-driven founder. I got really lucky to get the latter. So from him, I got a ton of exposure to psychology, people, sales, and it's a lot of transferable skills that we'll cover here shortly as well. But I worked my way up the corporate ladder. I ended up leading a team of 150 people at a public company, all focused on how to confront the right people at scale, how to convince them that you're worth their time. These are people that were 3, 4, 5 stages of life ahead of me. So a lot of those skills I took from there directly helped me go break into this space myself. The last 4 years or so, I've raised $95 million, probably closing about 100 the next few weeks, for real estate, for debt, for private equity, and something we'll cover here today too is just why the transferable skill? I'm sure people here do deals in multifamily, single family, buying businesses, right? All these other areas of opportunity in. That skill is applicable across everything. So really tangible skill in whatever path you choose to go down, that just helps massively. I've coached probably 200 plus students now on how to go raise money, and you want like a lot about people, right? In sales world too. I led really large sales teams, and what you find is that we had people who all perform well, right? Call that top 10%. And what you found was that in different ways, right? You take two people that were your top performers, they may get there in very different fashion, similar to raising money. You first kind of find where they fit in, what's their skill set, how do they sell themselves, how do they distribute themselves in the market. And I think the big thing too is that I've been zero on ads. You see a lot of bigger operators where there's time and place for it that pump cash into advertising. I think it can be a great strategy depending on where you are in your journey. But me personally, I've stayed away from it. Not saying it's bad, but something I personally haven't done. And I think it's really important here to think about what are you looking to solve for? Where everyone's in this room, everyone is in this community, and you're here for a reason. It's important to think about what was the intention you had when you joined? What is it you're looking to go solve for in your life, and how does it apply to it? So really getting very granular with what you want your life to look like is crucial. Oh. I think this is the old presentation. Did we do the new one on? By chance? We can just leave this. So when you look to go solve for things, right, you can be really intentional with what you want to do. So I think it's really important to think about what do you want your life to actually look like. And I think that's what I was too is like take your pen and paper and think about that number, right? Map out what your life looks like. And start figuring out what that number is each month that you want to go spend. Right? What kind of house are you in? What kind of vacations you take? What do you spend on a monthly basis? Right? All those things that relate to what your life actually looks like is really important. Because at times people go a different direction, right? They don't have clarity on what they want to do, who they want to become, how they want to spend their time. I think all those things are really crucial as you start building out and reverse engineering your life. So, for example, I think I saw it in the corporate world, where I was around people who were making $1 million plus a year, and they were absolutely miserable. They were working 80 hours a week. They were sitting at a cubicle desk. They were not taking care of themselves. They were missing out on family and personal events. And for them, that wasn't worth it, right? So for me, what I really dialed in personally was, I need to go earn X, live exactly how I want to live. And then you solve those big rock items, everything else kind of flows behind them, right? So I think it's a really important exercise to go through as, what do you want to do with your time? Who do you want to spend it with? What do you want to work on? And truly solving for a certain number, a certain lifestyle, a certain play that you have, and go reverse engineer it to kind of align that as well. So this ties into, what role do you personally want to go play? When you look at the different paths you can go take, this is really important. So I think I was talking to Brock yesterday about this, right? And Brock buys mobile home parks. And for him, with the conversation that you can go solve in the first piece, right? Becoming an owner operator. You're buying deals with the intention of, how can I create enough cash flow to go figure out what I want to do when I grow up? I think a lot of people here are here with that reason. They're saying, hey, if I can go get to $10,000, $20,000, $30,000 a month, I can go figure out what I want to do with my time. I can go figure out what projects I want to go work on. Right? Because you have your baseline covered, and then you can be really intentional with, what do you want to do? So, for example, there was someone in my community, Chris, he was buying multifamily, right? He was buying 8, 10, 12 new deals. And for him, his goal was get $12,000 a month. That was the thing his wife needed to go leave his job comfortably. And now, he has time to go figure out what he wants to go do. So he started a syndication business, right? And this is a different model, where the syndication business, you are hiring a lot, you have a lot of expenses, a lot more upside, but also your earnings can be way down the road in the future as well. It can get there. I know a lot of us got deals in 21, 22. A lot of those deals are not worth very much now, right? Looking at your future profits. So not always a bad thing, but something to consider too is that this is more of a long-term play. You're building a bigger company around it. Or the capital allocator play. This is kind of where I lived the last while. And it's a lifestyle play, where you figure out what the highest and best use of your skill set is. For me, it was the sales side. It was finding great partners. It was having a smaller piece of bigger deals and more frequent deals. So, not a right or wrong answer. It's really important to dive into it and see what piece of the puzzle you want to play and where your skill set falls and what you want to go do. So, this ties, and not too deep into anything compliance related, but when you're looking at structuring deals for raising capital, having the end outcome of what you want to solve for is really important. So take that first person, right? Say, for example, Brock, again, to pick on you, right? He's looking to go say, hey, how can I build a portfolio of 200 pads mobile home parks where I own myself, make cash flow, right? You want to go structure a deal as debt. You can go raise money, structure as a note, go pay your investors back after refinance, and you own those deals yourself. You cash flow far more, right? Or say you have some cash yourself, right? You've done well in the field, take MOE, right? Looking at the venture structure, right? Going to partner with a few people, going to go build a portfolio, right? Kind of own those things yourself long term as well. Maybe have 1 or 2 investors here and there. And we're looking at the syndication route, right? Very good. I'm going to look at the syndication route. There's 2 common structures you'll use. We'll get into more fun stuff here shortly too, but the 2 common structures you'll see is 506B and 506C. I think it's really important to understand which makes sense for you as well, right? As to how you're going to raise money. So in a 506B, you can go take on 35 investors, 400 credited. If you call a check size of $50K, the minimum, right? There we go. So if you call check size a $50K minimum, then you can have $1.75 million that comes from those investors. We can go 2 slides over. Oh, that. So you're raising $1 million, $2 million, 506B is great, right? Go talk to friends or family first. The 506C route, right? You can go advertise, you can go publicly solicit, you can go tell your story on social media, which is great if you're doing bigger deals, right? is also protects you a lot more so in structure as well as piloting. Sure, I think pilots here as well, we'll talk about this later too. But it really depends on what you want to go solve for and align the structure and type of capital you have that comes in to align to that end vision that you want to go have. So my path, I know Jenny's mentioned this briefly. I started buying single-family homes when this was back in 2018. And I bought one home off of Brucestock.com, if anyone's familiar with that. And long story short, found the seller, bought 9 more homes over a 9-month period with delayed seller financing. Delayed cash refinances, or buying in cash, fully cash out after. And this was really tough, right? It's hard to look at business. There's 2 things you consider. One is, can I get this business to a place that I want to grow to? And 2, if it grows that way, do I want to manage it? The answer was maybe and absolutely not. And for me, like my big aha moment, right? I was in a tech company, leading a large team, had a lot of responsibility, and I had to go do regular board meetings every quarter to go prep our CFO to go share numbers with the public, right? All of our investors and shareholders. And I had a tenant who drunkenly drove over her sewer line with a lawnmower. And that week, I think I got 150 calls from, I owned 10 houses in a row, from every tenant there, so I got my phone number, the property manager, vendors, and this was during board prep. And it was super stressful. But I realized at the time was that it's not just a return on your money, right? For me, it was both return on your money, but also return on your headspace and your mental capacity and your bandwidth, your opportunity cost, right? So for me, I knew that if I went this path, I'd be sacrificing my corporate role in a massive way. That corporate role I had at the time was fueling all the growth in terms of earnings, ability to go sign on debt, and growth there. So it's a huge trade-off. So from there, I pivoted. All those houses were listed in 24 hours. Luckily, it's time that Zillow was still buying homes. They put all the homes, set on the scene the next 3 or 4 months. And guys can move on from that. And at that time, I started listening to every podcast I could listen to, big indicators, people like they know in the space very well. I'm like, okay, let me go interview these guys, right? Go talk to them, see what they're doing. And I quickly learned about passive investing. I started investing into everything I did to go thinking. I think at this point I'm in 75 deals as an LP. Some really good, some not so good. And in that, you get really exposure to what's it like to operate, who do you want to work with, right? So that kind of started stemming from, okay, this is a business. I can truly be passive. I can write a check, be hands-on. All I'm trading is my time, paying a small fee to do so, and being hands-off in that project. Be really experienced for what you like, where you don't like, and all the above. And so kind of went through a phase where I partnered with probably 15 different operators in the last 4 or so years. A few I've gone very deep with, and also brought capital to their projects, whether it be a co-GP structure that was more involved, or a purely fund-to-fund structure in which I was getting better economics for its capital for them. And now it's become full circle, where I do a little bit of both, right? Where I still have certain partners in certain deals. And if you're listening to this too, and you're saying, hey, I'm an operator in North Carolina, and I have a multi-family here. You got investors that want exposure to debt. They want different opportunities, right? Like take Jennings, working through now on his debt fund, right? He's a multi-family, done debt, he's now doing a debt fund. They provide different things to investors as well. So you position yourself as, hey, we're an expert here. And if you want these type of deals, we'll offer them for you. But if you want exposure to these other things, talk to us about this. It gives that flexibility to go get more capital out of that same person. Because what you're seeing is that if I am an investor and saying, hey, we multi-family deals, hundreds plus in Dallas, Texas. Like a lot of people you may know do. Nothing wrong with that. But in turn, you may only get, if they have $1 to go invest, 25 cents. What you want to think about is how do you go capture that full dollar from them? By giving them diversity, by giving them different opportunities, different structures, different intentions beyond that capital, different liquidity preferences, right? So all those things will help to build an actual portfolio versus saying, hey, we do this, do you like it or not? What it also allows you to do is sell against each other, right? I'm sure in the phone, if you guys have gone through a raise, you double it, where you get told no all the time. And you're always asking, will you invest? Will you give us money? Right? And most people hear it is there's a level of, at times, desperation. What's really powerful is saying, hey, Greg, we have this deal right now. Based on the conversation we had a while back, this isn't for you. And telling Craig no, Craig wants to invest this way more now. Because investors very rarely hear no. Usually it's please. And if you can go reframe yourself, position yourself in a different way of one, not being desperate, and you get there by having either an overflow of capital, by starting before you need it, or by having optionality. If I say, hey, Craig, this isn't for you, but it's something we're probably a few weeks out on launching that I think based on what I know about you, your situation, your family, and your goals, makes a lot more sense for you. When I have that, is it okay if I make you a call? Craig's likely to make that call. So position yourself as the person they go to for advice, for different opportunities, helps a ton in that way. So on my end now, I'm on the capital allocator route, did that for quite a while, and there are certain things to give up though too, which I'll cover here later as well. But a big one is control piece of it, right? You're leaning on partners very heavily. Now I focus more on a hybrid approach. I operate some things myself, and some things I partner with. So it really depends on where you are in your life and what you want out of it. It'll really help dictate and drive the direction you choose to go. So here's a good one. How do you go pick your partners? Whether it's the operating partners, people you like, joint venture partners, investors, right? In any scenario in what you're doing, the people matter more than anything else, right? This is a people business all day long, right? And I think you saw a lot of this the last few years too, people who've been active the last handful of years, is that if you do a deal, you want to hold it for 5, 10 years, the likelihood of something going wrong at some point in that transaction, even if the deal goes well, is extremely high. You find out a lot about people when things go wrong. So the people matter a ton in this, no matter what, right? Like it's a people business all day long, and that's a huge piece of it. So finding those good people to actually work with on a human level matters a lot. If you think of this going back to what your ideal life looks like, who you work with matters so much, right? Because you work with these people in good times, in bad times, in high stress times, right? In times that, as you're going from, say, an employee, right, where you're getting a paycheck every week, to putting your own money into things and things go bad, that's a huge shift. You want to be people who will go support you in that as well. I also think social capital is huge. So the secret formula, right? Talking about how much capital you put into it. That's important to me. I think also it's really important to think about some social capital, right? Where if you take Jenny's dating, right? They have a great platform here, all the people here are here because of them, right? And each other. So for them, in Jenny's throwing into a deal, he has social capital, right? You trust him, you know him, he has a reputation that he's built. So in turn, he does something unethical, right? Or something that is not up to par. That piece of business hurt him far more than his dollar investment could have. Right? If you lose $1 in a deal, it's a dollar cost. If you lose $1 of your money, or if he causes a bad relationship there, that'll cost him far more than that overall. So social capital is massive in terms of who you work with. I work with someone who's a huge social presence that their brand is worth way more than money they put into a deal. Also, this one you learn from going through some stuff, right? Kind of divorce before you get married in a lot of these deals. And understanding that, hey, if things go south, how do we go separate? Right? Like it's a difficult conversation up front, but it'll save you so much money, pain, stress, doing it early. Having those little conversations early on, you know how uncomfortable that is? Make that 100 times worse when things are actually going through something bad. So that's a really important piece that at times people don't think about. And ensuring your tour duty aligns, right? There's certain people that you work with for a season, to get to a certain place. There's certain people you partner with for the very long term. So it's important to understand what these first want to get out of this relationship and align it so that there's very clear expectations, you guys working on things together, and if you both succeed, both lead in a better place. So it's having these tough conversations up front as to who you work with, why you work with them, what your strategy is, right? All those areas that align on the same page. And those difficult conversations are so much worse after the fact too early. So I'm sure a lot of you have seen this. When you actually start, now let's just talk about some like logistics of raising money. When you see these things, right? Know, like, and trust. What's most important is this. So I heard you trust most of the audience. If people don't know who you are, there's no way they can even trust you. So part of what you have to do is get yourself out there, right? You be the most trustworthy person. You know, like, be the most likable person. People have no clue who you are. How can they like you? How can they trust you? So what we're going to cover a lot here as well is how to get yourself out there in a way that more people know who you are and what you're doing, right? I think it's a huge misconception that being trustworthy is the biggest thing, right? Most people in the space, best operators don't always win. Long term, at times, but usually best marketers, right? Like you go think of, and it's also marketers from a point of view. So take, for example, Grant Cardone. When I say that name, everyone here has a reaction in their head, right? Because you know who he is. You may like him, you may hate him. You like to have a point of view on who he is. And what that means is that you make a decision on working with him either way. So if you love him, you'll support him. If you hate him, you won't. What it becomes is people have a decision about you, right? What you don't want to have happen is say, Sam, like no one takes action on that. People want to have a point of view. They want to really understand either way. So people have to know who you are, and then from there you start building the likability, the trust piece of it. But getting yourself out there in front of your target audience is massive. And when you look at kind of getting in front of your audience, you just got to figure out what your story is. So why did you use this, right? Why are you doing what you're doing today? What was your moment that was like your aha moment? Which a lot of people here started on this journey for a certain reason, right? Like, Brock, I'll pick on you. Well, like, why did you start?
Retirement.
Okay, why?
I'm building up buildings, and 30 years now I can't go on doing it, so I got into real estate, so I can have a retirement.
Okay, so it's important to crack that story, right? So, and why does it matter if you can't buildings in 30 years? Like, what happens? You can't go buildings in 30 years, what happens?
I don't know, you can.
Okay, and what happens?
Morehouse.
Morehouse.
So you have to go like much deeper in these levels of things, right? Like at times you think of, you know, whether you're posting social media, you're telling your story, you're sharing the what of what you're doing. Go really deep, right? Like what's the why behind it? So for example, in Brock's case, he's like, hey, I've built a career that is labor intensive, right? It's manual labor. I'm climbing on roofs. I have risk of getting injured. In 30 years, my body will freaking hate me. And if I get hurt, I can provide for my family. Right? You got what, 2 kids? 3 kids, a wife, right? So like that's the root of what you're telling them. So you can really build that story as to this is all I knew when I first started. This career allowed me to go help build something for my family at the time. And now I realized that if I live 30 years in the future, this is not sustainable to go do. So you have to really craft that story as to what's your messaging, why are you doing it, why should people believe in what you're doing, and then what was an aha moment? So anyone here just had like a big aha moment as to why they got in the space, who wants to share it? Not all at once.
So for me, I started out real estate in 2017. I was 9 months pregnant and terminated for my job. And so I got into real estate, and so for me, my aha moment, this gave me the knowledge to never be homeless again or never have to worry for my kids again. So that way, no matter what situation, I have the knowledge to consistently have some kind of income.
Yeah, that's awesome. So yours by necessity, right? Of like you realize that hey, the corporate system isn't actually truly safe. Right? I think at times people think if I get this corporate job, it's super safe. I'm going to down this road to going to college, investing 40% in college, investing into a corporate career that you can replace with your 9 months pregnant. Right? Like that's not very safe to me. So you look at it as telling that story, right? Why you're doing what's driving behind you. People attach to that, right? Unless you're a Blackstone, I'm sure it's all not. Most people here aren't, right? People aren't investing with your brand. They're investing with you personally, right? They're digging into who you are as a person. They're building trust in you, and that's extremely important to have that story as to why you're doing it. So I think everyone should really dial into what's your story, and whatever level you go a hell of a lot deeper. right? Like take the same thing with Brock, right? Go way deeper as to crafting a story. You may have the bones of it, right? But go really deep as to why you're doing what you're doing and why this matters for you, your family, your life, like whatever it is. Everyone's different, but it's important to have that story craft. And having an aha moment is huge, right? Like telling that story as to this is why we're doing what we're doing. This is what shifted my mindset. Because part of what you're doing, there are two types of investors usually, right? You'll have people who are unfamiliar with this type of stuff, where you're saying, hey, why this? Then you have people who are dial-in investors, and it becomes why you, right, versus someone else. So it's important to understand who you're speaking with, how to go frame what you're doing, right? You can align that story really well with them. Then framing your offer, right? So kind of going back to the example I used with Jennings, where he does multifamily, step fund, right? Figuring out the offer that you have, where does it fit in? What are your selling points, right? Each offer that you're working on, whether it be you're buying a multifamily deal that's 60 units in your backyard, right? Why does that matter, right? Figuring out what those things are that you compete on. So, for example, on my end, I've raised capital for single-family apartments, multifamily apartments, storage, debt, storage, mobile home parks, RV campgrounds, private equity deals, and each deal is framed very different because they solve something else for someone, right? For example, we've done deals in a similar debt fund where the intention is, hey, this is liquid, right? You can deploy your capital out for a period of time. And for people, that taps into a different bucket of capital they may have. Because certain people have this amount that they need to have access to wherever life brings them. Right? Certain times you have capital that's saying, hey, I want to go grow at all costs. Right? All I care about is growing. Certain capitals are ending cash flow. Certain capital has very low risk. I manage my money very different than I manage my mom's. Because for her, I care about cash flow for her and not getting calls of her freaking out when things go bad. So I put herself in very, very low risk, a very high likelihood of success type of stuff, even if the total return is being a little bit lower. It's important to understand where is your offer and how does it fit into the market in that sense too. And what things you can go sell, like what makes your product different, what does your team look like? Your team be a huge selling point, especially those here who don't have experience. Like who hasn't done a deal yet? Okay, actually, not all people, it's awesome. Speaks to the program, which is great. So when you're first starting out, maybe you haven't done something that size, right? Who's looking at deals bigger than they have done in the past? Okay. So at times, people may say, hey, we know Joe, as Joe does 8-unit apartment complexes. Joe's looking at a 100-unit deal now. That's a whole different experience, a whole different way of framing it. So in turn, if Joe goes and partners with Pete, who's done 100-unit deals, Joe has credibility. So it's figuring out what your team looks like and who can you go pull into it. July has some part of the credibility. It's United. When I first started, I had zero real estate experience in type deals I was doing. I owned 2 single-family homes. I got luckiest when I bought them. There was nothing skill about what I did at all. But it was I had a few bucks, I got lucky in timing, and lucky I got a sale. But if you're doing some things you don't have experience in, it's borrowing that person's experience. So when I got into doing bigger deals, I wouldn't go pitch me. I'd go pitch with partners I had. They have the selling point. They have a piece of credibility. So I had to leverage their skill sets, leverage their knowledge, leverage their backgrounds, leverage their bigger teams versus myself, my gym shorts, and my home office, right? In terms of making more people to work with us. So it's figuring out who you're working with and kind of leveraging them as a talking point. You gotta find those people who go fill your gaps. Because what happens is that I was on their team first. Now I have that credibility. I've done deals that size. I've been involved there. So you're basically borrowing that gap and finding people who can help fill that for you. I'm sure here in this room alone, there's tons of people who are looking at certain things that can help you fill that gap in a certain way. Next, it's figuring out like why this asset class, why this market, why now, right? What are those things you can go speak about to the market it's in, type of asset class versus the other one. So all those things are talking points you all to work through, and you start figuring out how to go frame your offer in the market itself. All right, here you talk about who you're raising capital from. Like what types of people do you want to raise from? And you hear the common things. The thing to think about too is that figuring out, next slide. Like, circle it, your geometrics are. And you hear people like the doctors, the lawyers, the accountants, the athletes, the salespeople, right? So you start building out your investor profile. And at times, a lot of people will say, hey, who are your investors? And they'll say, people who are accredited. That's not an investor, right? The reason I say that is that a lot of people are accredited. But if you go try to speak to people who just have money, you're talking to no one. You want to niche down, and then niche down way further. So what happens is that people think if they talk to too small of an audience, that no one will hear them. But it's actually the exact opposite. If you talk to too big of an audience, no one will, it's very surface level, right? Think like ChatGPT content on LinkedIn or Facebook, right? Everyone knows. And but you go really deep as to who you're speaking with. So first thing of, do they actually have money? And there's certain people I've talked to, they may, targeting your former self is a great admin. But say you were a construction worker. Nothing wrong with that profession at all. But Rob, will you target people in your field previously? Because they don't have money, right? Not there's anything wrong with that career. But if I'm going to target someone, put all this effort into getting in front of them, I want to find people, or if I get them, and they're interested, they actually have money to invest. If you think about it, that person making $200K a year, are they accredited? Sure. But like play it out. Taxes, insurance, deductions, probably take home $10,000 a month. Maybe they live on 7, so there's $3,000 a month of delta. They have $36,000 a year of upward. Most minimum check sizes are 50K. They must make a deal every year, every 2 years, right? So you want to do is who actually has money. And what you find is the more money people have, the easier actually is to get it out of them. For someone if they're making $500,000 a year, then giving you 50K is far more digestible than making $200,000 a year. Because the scarcity piece isn't there. So when you think of building your investor avatars, do they have money? Can you speak in their voice? So can you understand their language, how they think, how they operate? A big thing you can go do is say, you want to go target someone you know nothing about. So you want to go target surgeons, some type of surgeon, right? Go find them. Like, hey, I'm building out this investor avatar. You fit this profile that I want to talk to. Can I give you $500 for an hour at a time? And I was going to ask you 100 questions. I want to record the call. And I'm going to learn how you think and how you operate. Because the best way to go learn someone, if you don't know them in the first place, is do a deep dive on how they think. Build a profile. Right? Think of like a Law & Order episode where you're going into and like profiling a serial killer, right? So you'll be able to go really think of who they are, how they operate, right? So you can speak their language. Next, you must get actual access to them. I give the example of I'm a diehard Knicks fan, right? A huge basketball fan. And athletes make a ton of money. There's a lot of them. Do I have access to them? Absolutely not. So I go spend all this time, effort to get in front of them, it's not worth it. And then also going very deep into who it is you target. Don't go wide, right? Whatever your persona is you're thinking through, go deeper. Be more specific. And this is an example of one of the profiles that I targeted. I was with names, just because it's easier. So I called the executive. So for me, these are people that were roughly 35 years old or so. They make between $3 to $15 million a year. They were usually worth by $500,000 to $10 million plus. And usually male. They were VPs, C-level executives, sales directors. They were people in sales, in technology or software. And you think this is very specific. If you go on LinkedIn and you put in these criteria, and LinkedIn you can search for this criteria, right? You go break out all these different features you can go search for. So something to go think about too is that if you can find a profile of a person that needs LinkedIn for their job. I was in sales for a while. My LinkedIn dinged, I thought mine was there. So what I knew is that these people, if I ping them, they will at least see it, which is a massive barrier to overcome. So the reason I focused on this looks very specific. There's over 500,000 of these people in the US. I've raised roughly $100 million with 300 investors. So at times, people think they need 1,000 people to go listen to them. You need a very small audience that's very bought in. You can go speak their language in a massive way. I knew for them, if I go to someone's profile, how much they make based on their tenure, based on their role, the time of the year they were in, the seasonality of the company they were with as well, all those things that I could go speak their language because I knew who they were. So it's really important that the better you understand that person. And luckily for me is I was never looking for this is myself a few years back. So for me is I can go speak their language, understand who they are, and relate to them. And you have that credibility. It's a peer-to-peer conversation, which is huge. So figuring out who those people are for you and going very, very deep there will help you in a massive way. So, where do you go find these people? So LinkedIn Sales Navigator is my favorite tool in the entire world. You can go search by every single function possible, and you can go drill down an audience that's super direct. So if you find that certain people are on LinkedIn, so for example, I have some of my community who raises tens of millions of dollars a year from dentists. In turn, dentists don't need LinkedIn for their job. They may have it on there for they have presence, but if their job success being tied to LinkedIn, likely not. But if you're in tech sales, for example, my profile, they're on there every single day, and you have access to them. For him, he has a Facebook group, right? All around dentists for passive listing. And he shares content, he speaks to a language because that was him, right? That's what actually is him in terms of doing the role. He's got down now, which is great, but he's still doing that. He can speak the language very well, right? Other social media, Twitter or newsletters is huge, which I don't have on here. Building a newsletter and go to share stories is massive. Having someplace you can go capture emails effortlessly is huge. Local meetups are great in terms of people that figure profiles, connections you can go make. And then paid communities, right? You can go get access to. I think I'm in 6 masterminds right now for 6 figures plus a year in total. And certain groups I join either for access to people in terms of who's in there, or access to certain knowledge, like you all are here today for as well. Then referrals. This is the easiest one that everyone misses. If you talk to someone, like, when's the best time to ask for a referral? Anyone in the audience? Correct. People are usually most excited. They're taking out their credit cards to go buy. They're taking out their wire instructions to save you money. They're super excited about it. That's the single best time to ask someone. Like, hey, thank you for your investment, or stories is important to you. Do you know anyone else who'd be interested in learning more about this? And just wait. You'll be surprised as to how many referrals you can go get. People like sharing things that they feel confident about. Right? You look at it as a referral is a reflection of you. If you get really good referrals, people hold you in high regard. On your job, it becomes direct that referral. Right? Where if you go help Ray, who sends someone your way, and give them a really good experience, like, wow, Ray, thank you. And that gives Ray confidence saying, hey, you know what? We took great care of this person I sent their way. I'll send more people your way. No problem, right? So take care of those people in terms of the experience you gave them. Not even in terms of like gifts or money, right? It's more so give them a good experience, help them feel confident that if they send someone to you, so take care of them. And the full active type stuff as well. LinkedIn, you can have 150 connection requests per week. Use them. You can go build your network. So you look at it. On LinkedIn, you have your connections. And your connections fall into 2 buckets. Connections that your total number, right? Call that 10. And you look at your 10 people on there. How many of those 10 people actually fit the profile that you want to raise capital from? Say that's 7. Means your total actual connection base is really 7, not 10. And there's people that fit your profile who you want to connect with. A benefit you have, you can send out 150 connection requests per week on LinkedIn. People that fit exactly the profile you want to go talk to. And in turn, when you share your story, you spend time crafting, and you build the messaging out there, people are connecting with you, they'll see it. So you have people who you force feed your audience by connecting with them. You can go manually force effort there. So run the numbers. 150 a week, 7,500 per year. Say 25 of those accept percentage-wise. That's 2,000 connections every single year. You keep stacking each other. And when you start posting content and sharing your stuff, people that fit your profile, their connections are likely similar to themselves. So in turn, if they comment on your stories, you comment on their stuff, if you engage with them, it gives you more visibility into communities of people that fit the profile that you want to go target and speak with. So direct messaging is huge. I have VAs connect my inbox. I'm never on there. That is a lot of work. But it's massive, right? Starting conversations there, being in person, right? Creating articles, sharing content that relevant to them. That's why it's so important to know your persona inside and out So you can go speak to them really well. The more you can go be aligning to them and understanding how they think and how they operate, the better you can go connect with them. And just engagement on the platform too is huge. Say, for example, targeting people in sales. If I can go find coordinating sales leaders that have a big following, go comment on their stuff, people likely looking at it, fit that same profile as well. So you're creating visibility for yourself across the board. And most people think you need some like massive tech stack that is $10,000 a year. Like keep it really simple. LinkedIn Sales Navigator is probably $1,000 a year, if that. Facebook is free. Right, a CRM like Active Campaign or MailChimp or Going Level, like all under $100 a month, so you get some scale. You don't need anything super fancy or like that as well. And then the best tool eventually is probably $100 a month until you get to a place of scale as well. And go get a landing page for $500. Right? Most people think they need all this stuff really built out. You need a $10,000 website, you need all these things. I probably raised less than 1% of the money I've raised for my website. But people want to go look at it saying, hey, I spoke to Sam. I'm going to go check out all this stuff now. Does he make it feel like it's legit? It's very rare to go pop on your site and say, hey, I'm looking to invest in multiple investigations then. Doesn't usually happen. It's more as they talk to you and they say, okay, Sam seems like a decent enough guy. Let me go fact check all of his stuff. Is he legit? Do I feel confident that he's going to do what he says he's going to do? So you keep it super simple in terms of tech stack too. And again, like keep it simple with everything, right? This business is so simple, very simple. It's not easy, but it's very simple. Those are very different things. So find people that you want to talk to, book calls with them, have the conversation, add them to your CRM, send them updates in terms of your newsletter, your story updates, deal updates. Stay in front of them, right? People want to be, they want us to be there for the long haul. They want to go engage with you. And as simple as it sounds, like go do what you say you're going to do, when you say you're going to do it. That holds massive value for credibility. And again, too, think about the life you actually want to have, and go track it, right? You can go reverse engineer this. At times, people go sprint towards a goal, they move what the goal actually is. So what I'd say is like really good detail as to what your dream life looks like. Go map it out. What are you earning? What are you spending? Who are you with? How are you allocating your time? What are you working on? What excites you, right? All those things. Go map it out. And then go start saying, okay, if I need to get there, what are those steps I have to take to reverse engineer to getting that same place? And then track it. Again, keep the end in mind. Cool. Yeah, thank you so much.
Sam, thank you.
Thank you so much.
Okay, y'all, I took some notes. Don't go away, Sam. Don't go away. Don't go away. First off, this is more knowledge, right? I know people out there using LinkedIn. I'm not, but now I have to get back to the fringe and start using LinkedIn this next week. Speaking the language, y'all. Learning the knowledge to speak the insider language is such a critical piece so that people take you seriously. Niche down. Anybody ever been in a networking group where the Mary Kay lady says, I'm looking for anybody with skin? Like, well, thanks, Mary Kay lady. Everybody I know has skin. Sam, you have skin? My Mary Kay lady's looking for people with skin. That sounds super creepy. Right? You niche down far enough, and it's easy for people to think of who you need to talk to. Who's your avatar? Where do they hang out? Awesome stuff. Sam, thank you again. Y'all give it up for Sam Silverman.